Today, the market got to work processing the shockingly strong victory for President-elect Trump, trying to figure out winners and losers on the fly. I think some of these verdicts were wrong, more on that later, but there was one theme in today's action that feels really right to me. With Trump's antitrust regulators, mergers and acquisitions are about to come back in a big way. It's a huge deal, as this was one of the longest M&A dry spells in modern history. Takeovers are a major reason why people like you and I own stock. I for my trust, you for your portfolio. And I've got to tell you, Biden's regulators practically tried to shut down the takeovers, and it really crimped how much you could make. You saw this all over the tape today. Capital One's acquisition of Discover Financial Services hasn't been formally challenged by the Biden administrator. But I got to tell you, many of us assumed it would face that kind of real scrutiny. That's kept the lid on Discover stock. Today, with the antitrust overhang now seemingly gone, Discover roared 20%, making it the largest winner in the S&P 500. And even the acquirer, Capital One, shot up 15%. In fact, Synchrony Financial, another credit card issuer focused on lower-end consumers, jumped almost 19% today, making it the second biggest gainer in the S&P 500. These three companies are something of a triumvirate in the lower-end segment of the credit card market. If the deal goes through, it becomes a two-man game, meaning much less competition, meaning bigger profits, meaning big gains for shareholders. But it's not just deals. Live Nation Entertainment, which owns live music venues, produces concert tours, also runs Ticketmaster, saw its stock rally 7%. The Justice Department, along with 30 states and district attorneys general, sued Live Nation and Ticketmaster this past spring for, in their words, quote, monopolization and other unlawful conduct that thwarts competition in markets across the live entertainment industry, end quote. According to a recent update, that civil case isn't expected to happen in 2026. But will the new Trump administration's Justice Department pursue it as strongly or even at all? Today, the market's wager is that the answer is no. So which sectors look better now that M&A is effectively back on the menu and the Justice Department's antitrust division seems like it'll be far less aggressive in its pursuit of big business? First, I think this is a huge deal for the regional banks. The financials were the best-performing sector in the entire market today, up more than 6%. Now, some of that's because this group will benefit from a lighter regulatory touch from Washington. But I also think mergers are a huge part of the equation, because some of the stronger regional banks can either grow incrementally by acquiring smaller banks in their service areas, or maybe grow more aggressively by combining with each other to become super regionals, with the scale to compete with the big national players like Bank of America, Citi, JP Morgan, Chase, Wells Fargo. Ever since the financial crisis, any kind of bank deal has gotten extra scrutiny, to the point where most of the regionals seem to have given up on M&A. Don't be surprised to see that trend change. What else? I think there could be a lot of benefit from further tie-ups in the energy sector, especially among the exploration, production, or E&P players. Aside from an affinity for tariffs, one of the main things we know about Trump's economic plan is that he plans to be much more friendly to domestic energy producers. You could say drill, baby, drill is back. That said, freeing up oil and gas companies to boost production might not actually help their stocks, because higher production means lower prices. And one of the great ironies of the past 8 years, energy stocks have done far better under Biden than they did under Trump. The S&P Energy ETF, the XLE, is up 205% since the 2020 election, but it was down 57% from when Trump got elected to when Biden got elected. Now, but this time, would it be different? I don't know. If they allow more energy, oil and gas deals, to see more mergers, creating some powerful mid-sized E&P companies with better balance sheets that can have more influence in the industry, then the answer is that energy can make a big comeback. Finally, there is my industry, and this is what we spent some time on, the media communications sector. This is an industry that's trying to retrench, find a sustainable way forward, following a long period of disruption and not great numbers. Now, we've got Netflix disrupting television. We've got T-Mobile and Starlink disrupting broadband. Tough environment. But one thing's for certain. Many of the legacy players in the media space could benefit from joining forces. Could we see some of the smaller independent companies like Paramount, which already has a pending acquisition from the Ellison family, combine part of it, maybe combine some or all of it with Warner Brothers Discovery? Maybe our parent company, Comcast, does a deal to acquire the struggling Charter Communications to improve its scale in home broadband. I've seen speculation on this, but I have no particular insight into Comcast's decision-making. I do know this. The Biden administration has been incredibly hostile to consumer-facing acquisitions like these. But Trump's second term will likely have much less. They're just not interested in blocking these kinds of deals. They probably don't see what's wrong with them. Again, it's not just M&A. There's also the antitrust enforcement side of the equation. I think it's safe to say that some of the companies we already knew were under scrutiny are incrementally in a better place today, and that includes Apple, which was sued by the Justice Department earlier this year, and NVIDIA, which was widely reported to be facing antitrust scrutiny from the Biden Justice Department. I think because they're doing so well. But given the more fickle nature of normal antitrust reviews, which are basically at the discretion of the regulator, I have to add a caveat here. While I think the nation's largest companies are likely safer from antitrust scrutiny, that's only so long as they stay on the right side of President-elect Trump. Remember, one of the few times the first Trump administration chose to use its antitrust authority was when it sued to block the AT&T-Time Warner merger back in 2017. Primarily because then President Trump didn't care for CNN, which was a part of Time Warner at the time. So it's not a surprise to see most of America's big-name tech CEOs come out today with enthusiastic public messages of congratulations for President-elect Trump. Alphabet Sundar Pichai even included a nice picture, which I'm sure Trump will appreciate. And remember, Trump and Meta Zuckerberg have gotten on good terms. So here's the bottom line. The market's doing its best to sort out the winners and losers from the election of Donald Trump for a second term. I think people are getting a lot right with some big mistakes thrown in. But I am very confident in the idea that under President Trump, M&A is about to come back and back bigly. Companies will no longer have to fear super strict antitrust scrutiny so long as they stay on the right side of our mercurial president-elect. And let's be real clear about something. The CEOs I talk about all the time behind the scenes, across the board, always speak about the tyranny of the FTC and the Justice Department. As of yesterday, that tyranny is over. Mid Money's back after the break.
Coming up, is this old industrial learning some new tricks? Cummins hits a new 52-week high today, and Cramer's reviewing his bull case for the energy transition play. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.